Welcome to Pressure Points. I'm Gene. Our topic tonight is Nvidia earnings. It has the tech landscape riveted to the after hours trading. The stock's currently up 9% in after hours as of this recording. We're going to talk a little bit about the quarter and the stock in the near term, and then hit the pressure point, which is what is the underlying growth rate of this company for 2025 and beyond. As far as the quarter, it was a relief. They had a slight upside. They also guided the April quarter, which is the current quarter we're in, about 9% higher than where consensus was. And that caused this relief rally in the stock. I think that's the primary reason why the stock is up. It effectively recaptures the loss in the stock over the last 3 days. So it's gone down about 9% now over the last 3 days, and now it's up 9%. So we're kind of where we were at. Of course, just before earnings, there was some negative commentary out from the sell side about expectations, and then we had Palo Alto Networks had a slight guide down, and the stock was down 25% plus on that today, which kind of reminded investors if things aren't perfect, then they can go down quickly. And so in this case, I think the quarter was perfect. They continue to grow. They grew at 265% in the just reported January quarter and are expected to grow at 235% in the April quarter. And that is off of a little bit more of a difficult comp this quarter. It's about a 7% more difficult comp. But when you kind of put it all together, they had the appropriate upside to cause this relief rally. But that is a good segue to what is more important, which is the pressure point, and that is what is Nvidia's underlying growth? I just talked about the current growth numbers. And if you look at calendar 24, the street's looking for tomorrow, they'll probably be at around 70% growth, down from that mid-250s growth. And then for calendar 25, the numbers will probably come out in the high teens, call it 18%. So we see this dramatic slowdown. And that's why Nvidia shares essentially trade just above its growth rate in the high 20s on a next 12 months earnings multiple. Reasonable because investors think that this is going to slow dramatically. And so throughout the quarter or throughout the conference call, that's where my mind was at, is trying to get any sort of insight into in terms of Jensen Huang, the CEO's outlook in terms of what this growth, how the growth can continue. And two pieces I want to highlight here is during the prepared remarks, Jensen didn't say anything. And that's typical. The CFO does the talking. He answered the first question, and he talked about the opportunity in AI with what basically was muscle memory for him. He just kicks into talking about these 4 waves of AI. The first is related to the hyperscalers. This is the infrastructure layer. This is the AI startups. This is the big tech companies. And that is kind of pushing the current curve of adoption. The next phase, we're just still early within that, call it a quarter of the way through that. The second phase is at the application side, the enterprise side, and this is companies like ServiceNow or Salesforce, Adobe, implementing those applications. And we did see an uptick in inference. 40% of compute was related to inference, which suggests things are moving along there. But that's the second wave. The third wave hasn't even started, and that's generative AI within heavy industry. I don't quite know exactly how that works out, but Jensen's big on that. And last is sovereign AI, which is governments using artificial intelligence for their own knowledge base and also for culture. And so he started out the Q&A with just reminding investors how he believes that this has multiple levels. And then we navigated through the Q&A, not a ton of insight in terms of that pressure point question, what's the growth rate in 25 and beyond. And then he gave his final comment, his kind of sign-off comment. And a lot of times I just ignore these comments. I am reminded over the years that sometimes there's a little bit of an Easter egg that gets dropped in, and we did get a small one in this case. And specifically, he talked about the opportunity on the infrastructure side and then on the compute side. And his final comment, his sign-off comment, was effectively, we're at the early stage of AI. It's going to impact every company. Every company will be an AI company. And Nvidia is going to provide the infrastructure for that. And as far as the broader infrastructure, he views $1 trillion spend over the next 5 years. And he said that that would be about doubling. Now, that is more than just Nvidia's piece of it, the compute side with Nvidia. But he says trillion in infrastructure, essentially doubling. And then he said within that, on the compute side, which is Nvidia's piece, it could be several $100 billion business or market opportunity. So how do we interpret that? Several hundred billion. I'm just going to understand that this is very high level, but just take a pass at this or a swing at this, is that we'll take it as 300 billion in revenue is what he's saying in 5 years, which would be calendar 28, 300 billion in calendar 28. And if that's the case, that this is a $300 billion market in calendar 28, and Nvidia has a 60% share of that compute market. Today their share is just above 80%, but if they have 60%, that means that in calendar 28 they'll do 180 billion in revenue. Expectations are for calendar 25 is about as far out as analysts go, and that's for just around 110 billion. And so if you kind of fill in the compound growth rate from that 25 number of 110 billion to the 180 million in calendar 25, that's about a 16% CAGR. That's about 16% growth per year. That would be in years 25, 26, 27, and 28. And so he's basically building the case to say, yes, our growth is going to slow, but it will be slow and then kind of stabilize at that, call it 15%, as the infrastructure essentially doubles over the years. And so I think that's what's most important here. We know their growth rates are going to slow dramatically. The comps get really difficult in July, but any sort of insight in terms of what this business can grow at 25 and beyond is helpful. He gave us a little bit of it. You can take it or leave it. I tend to take it because I think that he knows what he's doing when he's talking about how the opportunity, and he's seen it in the business. So when we put it together, I think there is a case that they are guiding for revenue growth in those out years that are higher than where most expectations are. So that's a wrap on Nvidia quarter. Lots there, but that is the pressure point. On behalf of Pressure Points, bye for now.